Let's talk about you don't always need to pick the hot technology stocks to get those great returns. What are you talking about, Brent? Because, gosh, they've done very well over the years. Well, investing is very emotional, and it's always nice to be part of the crowd and go to a party like, yes, I got Apple. Yes, I got Alphabet. I got Amazon. Oh, it's so fun to brag about that. But they are not always the top performers. Sometimes your boring, undervalued companies can do very well.
Yeah, I mean, let's just take a look at an example here. I mean, everybody loves to talk about Apple, and Apple's been a little bit sluggish. Year to date, I still think actually they are still negative, I believe.
I think they're high 250 or 255.
260-ish,
260, yeah.
Yeah, but I mean, over the years, I don't want to discount that they done well, but if you look over the last 5 years, the gain was 114%. Again, not a bad return, but this, I think, would surprise people. If you look at a boring company like Tractor Supply, let's say, over the same 5 years, Tractor Supply was actually up 119%. If you look at an old insurance company, Allstate Insurance, we all say, gosh, that's a big, dumb, boring company, right? Property and casualty insurance, that's not very exciting. Well, get this. They were up 115%, so they also topped Apple's return. And then lastly, I mean, this one I think will blow people away, but if you were able to find value in a company called Tapestry, which owns Coach and Kate Spade, funny enough, we'll talk about them a little bit more down the road here.
Yes.
But your 5-year return on that company, 545%. I'll tell you, their balance sheet looked very good 5 years ago, and everybody's panicking over the COVID situation. That was the time to be buying some strong retailers. Like
it's funny, during that time frame, that was during COVID, a lot of people like, oh, they were all getting into buying the actual purses of Louis Vuittons and everything else. And it's just like, had you bought the stock, you're doing far, far better than buying the purses. But Apple's not only a big tech company that was surpassed by these boring companies. If you look at even Amazon, this one surprised me. Over the last 5 years, their return only 49%. I thought for sure they did far better than that, but only 49% for Amazon in the last 5 years.
And I'm not sure. I don't have. We'll look at Alphabet later in the show here, but I almost am wondering if Amazon is the worst performer of the big tech companies over the last 5 years, because 49% is pretty lackluster.
Yeah, I mean, I know Tesla did better.
Yeah, I'm pretty sure Microsoft has done better. I think they might be the worst performer in the Mag 7 there.
Yeah.
But one other thing, too, that many times people forget about is when you're looking at these boring companies, a lot of them pay dividends, and they generate cash flow that can be used to purchase other equities on sale. And you might hear, Apple pays a dividend. You're right. They do pay out billions of dollars for that dividend. Because the stock and the company is worth trillions of dollars, that dividend yield, I'm going to say, is minuscule. 0.45%. So, I mean, if you look at the return that you got on dividends, I'm going to look at Allstate and Tapestry. I'm not sure what Tractor Supply has as a dividend, but you far exceeded the dividend payments and dividend returns on those stocks over an Apple, where you got 0.45% on the yield now. So dividends are a great part to the total return, and those price appreciation numbers, those didn't include the dividend returns either.
And also, too, when you're talking about how Apple's 5-year gain was 114%, Allstate only 115%, people say, well, what's a big deal? It's only 1%. It's those dividends. And I'm very confident that over the last 5 years, Allstate has increased that dividend. I think they've yielded around 3%. So you've probably gotten, I'll say, maybe 15 to 20% more. And then you get the reinvestment, not into Allstate, but get to use that money to reinvest. That's one thing Warren Buffett likes, is to reinvest. Get that cash flow so you have more money to reinvest. You didn't get that with Apple, but you did get it with, I'm pretty sure Tractor Supply does pay a dividend, so does Allstate.
You got it with Apple, just to a much, much smaller degree.
Oh, yeah. I mean, 0.45% is not a very good dividend. And, it is kind of funny. It used to be much higher, and I don't think they've ever increased it.
They have increased it.
Oh,
they just steadily increased it, but the stock has gone up so much over, I'm going to say, the last 10 years that dividend yield is just, it's laughable. I mean, it's so small, but I mean, that's what happens when you're a stock that trades at 31 times earnings. If you're trading at that high of a multiple, you're not going to have a good dividend yield, because, dividend yield is going to be a function of the price of the stock. And, it just, I think, shows again how expensive Apple is.
Yeah, 31 times earnings. That kind of says it all.